Hey guys, sorry about being a little bit late. Yeah, I'm not doing the live video this morning. I haven't figured it out yet, to be honest. And I wanted to get a video in off the open, so just show you that we are actually doing this off the open every day. Like I say, I'm going to, my goal is to be completely transparent with my trades, with my trade setups, and we are going to put trades on right in front of you and take them off in front of you. I will put every trade I do in this strategy will be right in front of the audience. And I'm gonna hold your hand through the whole thing. So let's take a look at what we're doing this morning. 90 seconds to the open here. If you look at, so the equity index is not going to adjust yet on some of these, other type of interfaces, excuse me. But this right here at the CME Group, you can always go see where the futures are at. So we're up 16 points going into a long 3-day weekend. This is absolutely this is a vol selling opportunity, guys. This is as good as a vol selling opportunity gets. This is a little bit of a move higher, but we're coming from a higher vol, so this is still a significantly inside move. Let's just take a look at what that vol is, or what the suggested move would be. Hold on. So you see we're just off the open, 9:30, 10 seconds in. Now guys, you want to wait a second. Let's just see what happens. We're up 16 points, 14 points in the index off the opening print. That is absolutely no problem whatsoever. Remember, let's take a look at how this straddle opens. All right, we're gonna get a really good look at the expectations of the order flow in general, given how this straddle opens. So we're right around this strike, somewhere in the middle of the 28.35 and 40 strike, right? So it's yeah, about a 14 or 15 point move implied for the rest of the day, which, you know what, that's about right. We're up 15 points off the open, going into a slow day, into a long weekend. Yeah, 15 point move probably is pretty fair, but we're going to have inside moves back and forth for sure. This should not be a continuation type move. Remember, there's no news today. Okay, they never have news before close going into a long weekend. If there would be news, it would be geopolitical news that you can't control. Any sort of financial news that they can plan for, any sort of stock related news, any sort of directly equity market related news is already baked in. Nothing's going to happen today, guys. This is just going to be a couple bulls and bears fighting each other for a few swings back and forth. This is the day where you want to sell vol. This is how it lines up, okay? In my strategy in general, let's take a second to talk about this. Out of 10 days, probably 6 of them will be vol selling days. Another 2 will be days where I sit on my hands and do nothing and just watch. A bit of an ambiguous day, not sure what the market environment is bringing. However, those last 2 days, we will flop this on its head and go and take long vol shots, okay? So we're about a 60% short vol, 20% cash, and 20% long vol strategy. You're going to learn a lot more as you watch, guys. I can't explain it all at one time, but let's just take a look at what we should do this morning. Again, we're still sitting between those 2 strikes, and you can see the vol is, I mean, these options are melting right before our eyes. I think they're about to come in. Let's get this sale off before we get too far down, before we let theta kick in, right? So 28.38, again, we're looking at about a 15 point move is what I'm expecting. Seems to be about maybe a little bit less, 13, 14 points based on where the options are priced. So let's go down and take a look at some of these. This 10 point spread. Now, when you look at the maximum value of the spread, guys, and you're picking out some of these, the proper order point, what we're looking to do is to go 1 standard deviation down, 1 straddle price down, to look for the first sale. And if you look, and for the buy, you want to go another standard deviation, another straddle value down. So I'm looking at either 10 point spreads or even 15 point spreads, probably more like 10 because it's just easier to calculate in my head. Now what I'm doing is I'm looking at the maximum value of the spread. Into expiration, the maximum value of the spread is either going to be $10 or the minimum value 0, or anywhere in between. So the field we're playing with is a field of a potential value of 0, $10, or anywhere in between. So let's think about what that means, right? This $1 or so pricing in this 10 point put spread right now means that this spread roughly, if you ignore all the in-between values and just look at the 0 and the 10, okay, think about it in a binary fashion, there is roughly a 10% chance that that the market closes below 28.10, versus a 90% chance above. Now that is not completely accurate, guys, because of course there's the chances that doesn't account for the odds of things moving in the middle. I'm just giving you an idea of how you can think about this quick and dirty and understand your risk reward on the fly without needing to go back and look at these Greeks all the time, okay? Now, the Greeks are going to confuse you. I would suggest not even looking at the Greeks when you deal with 1 day, 2 day, and 3 day options, okay? It doesn't even make sense. We'll get more into that later. Let's put on a spread first before this K gets ahead of us. All right, we've starting to push that line. I'm gonna do this one right here, guys. 28.20, 28.10. I'm gonna try to do it for $1, taking the full 10%. So therefore, if I got into the iron fly, it would be more like $2. So it looks like I'm going to missing my dollar price right now. Just sit here for a second, okay? Could always come up here and do $1.30 or $1.35. So I'm not going to stretch and take this one for 90 cents or something like it's going to now. Okay, so I'm going to switch right now because we are in a little bit of a bull market and I want to catch this theta. 28 quarter, 28.15 put spread now. So I'm going to go for $1.40 here. Boom, filled, guys. Okay, I got $1.40. I just did a small trade. I sold 10 at $1.40. 28.15, 28.25 put spread. I'll be back in a couple hours. If this thing changes too much, I expect that I might be taking this one off in just a couple hours with a significant profit. Once we stabilize, guys, I may think about selling the call spread as well. The call spreads are not going to be as juicy as the put spreads just in general. So you're not going to get as much bang for your buck out of the call spreads, and in upward moving days like this, we are about to touch, well, we need another. Okay, under a 16 vol, remember it's a 1% implied move, guys. So we have about a 10-point more to go before we get to a 1 standard deviation higher. So it's, I mean, coming from yesterday's close, right? So yeah, I would expect us to continue to float up for a little while here, and so that put spread sale will continue to go in my favor. Yeah, look, it's already in my favor, guys, by 20 cents. I mean, I made $300 while we were sitting here. Happy trading. Talk to you soon. You are not alone, guys. I'm here for you. Bye.